Finance. He joined Mewa Alternates in 2013, involved in deal sourcing, investing, mentoring, and managing the exits. He's somebody who has represented multiple brands. He was involved in the exits of Parag Milk Foods via IPO, Mrs. Bector's Cremica via secondary sale for Fund 1. In Fund 2, he had investments in Shubham Housing, Kurlan, Dairy Classic, and Updater Services, to name a few. Also, he led the investments in N. Ranga Rao Sons, Kushal's, and Hapilo from Fund 3. Of course, he's going to be here with us, and Fund 4, we talk about brands like Lal Sweets, Pan Healthcare. Let's call upon none other than the co-head of Private Equity, Managing Director Investments, Motilal Oswal, Vijay Dhanukar. Vijay, truly looking for your expertise, and I'm sure a lot of brands will look forward to your valuable advice. We're now calling upon the founding member of Business who leads the agri vertical and heads mergers and acquisitions, driving strategic growth through acquisition. He played a key role in expanding Oxiso, the company's NBFC arm, and he's somebody who in the past has worked at Goldman Sachs London in investment banking, focusing on real estate financing across the EMEA region. We're talking about the founding member of Business, Thamarish Sinha. Let's give him a warm round of applause as we welcome him on the stage. We're also joined by the partner corporate finance and investment banking Deloitte South Asia, who's coming with over 15 years of investment banking experience with over $10 billion of closed deals across private and public fundraisers and mergers and acquisitions, and of course worked with platforms including Credit Suisse, First Boston, and Kotak Investment Banking. Let's call upon Rajat Sabharwal. Rajat is truly doing the deal still on his mobile. So Rajat is a busy man. Glad we got him in his billable hours. All right. Thank you so much, Rajat, for joining us. We also have with us the founder and managing director and CEO of Proventus Agrocom Limited and Provi Foods Private Limited. He started his career back in 1998 in the field of finance, and in 2005 he joined Edelweiss Capital Limited as a financial controller. Somebody who founded in late 2015 Proventus Agrocom Limited, and he's invested with a role of creation, management, and driving the growth of the company across the gamut of company operations. We're talking about Mr. D.P. Chawar. Let's give him a warmer round of applause. And finally, ladies and gentlemen, allow me an opportunity to now call upon our leader who brings in more than 25 years of experience in capital markets and financial services. Prior to founding Carnelian, he was a CEO of Edelweiss Securities Limited for 17 plus years. A passionate leader, he's somebody who's dedicated to building scalable businesses, nurturing talent, and developing leaders. Let's call upon none other than Vikas Khemani. So well, with that, I'd like to leave it in the able hands of our moderator, Mr. Kumar, to take it forward.
Hi. I think given the number of people, we'll have to make a lot more noise, guys. So, but good to have you here. And thank you all for joining us. Let me, maybe quickly start with a short context. I was just reading this up that, and this is quite surprising, but in the dry fruits and nuts, startups broader space, there are more than 200 startups which have actually raised money in the Indian market, collectively close to about $165 to $170 million in the last 7 to 8 odd years. So that's the kind of space which all of us together or all of you together have built. Maybe now the idea is obviously to take this a lot forward. Before I get into specific questions, I think, quickly I would like to give each of the panelists a quick minute to maybe quickly talk about what's their exposure to the dry fruit space before we get into any specific questions. So, all yours.
Yeah, thank you so much for having me here. Quick round of introduction. I'm Vijay from Motilal Oswal Private Equity. I co-head the private equity business for them. And our exposure to the nuts businesses that over the last 4-5 years We have been doing a lot of research in this space. Clearly, there's a large unorganized market, so we were looking to back one player in the space, and we feel that there's a very big opportunity available to make a transition from unorganized to organized, similar to what has happened in a lot of categories earlier. Categories like curd, snacks, and all, and probably a similar playbook we feel will be played in the dry fruit space. And basis that thesis, we invested in a company called Happy-Lo Dry Fruits, run by a founder called Vikas Nahar. So that is what is our exposure to the dried fruits and nuts space.
Hello everyone, first of all, congratulations on a great event. I just flew in today and was there last year when the first Mewa version happened. So congratulations to the entire founding team and everybody. It's a beautifully hosted event. If I ask someone to come here, they'll not believe it's only the second year running. So that's something saying things about this entire event. So as far as dry fruits is concerned, as a founding member of business and head of agri, I've been more of an insider in this business rather than being an investor. As an investor, we are shareholders of Kando Group, but as OFP leading agri vertical, I've seen the dry fruit space both from a trading perspective, manufacturing perspective, talking to a lot of startups, a lot of investors on both sides. I think it's a very nascent stage, but there's a lot of things which are correct about this industry going forward. I think today we get a great chance to sit along all of us and discuss those key things which will align the market towards institutional capital going forward. So looking forward to a discussion. Thank you.
Hi, thanks everyone. Thank you for having me here. I am Rachit Sabharwal. I am a partner with the corporate finance and investment banking practice at Deloitte South Asia. So at Deloitte, we have been spending a fair bit of time on this space, and as some of the other panelists said, it's an exciting space, it's an evolving space, right? And we have spent, a lot of time trying to find scalable businesses here from which we can build access to capital. One of the businesses was Happy-Lo. There are a few others that we are working with right now. And we believe that if the right ingredients are there, there's enough capital that can have for the right disciplines are followed. So yeah, looking forward to having engaging discussion here today. Thank you.
Thanks, Vivek. So I'm DP Jawar, founder of Provi Food. When we founded this company, and since beginning, we always believed there is a large opportunity because this whole dry fruit market was always unorganized in India, and there were several reasons. And post GST, there was large opportunity to work on this space where you can get lot more when you will be able to see the journey of unorganized to organized, this whole space. So since then, 2016, we founded this Provi Food, and we started with wholesale, and 2019 we started Provi brand, and working on dry fruit space. Now we have worked on all kind of dry fruits and largely on the supply. So our strength was always on the work on supply chain and reach to the consumer. Yeah, thanks.
Hi, my name is Vikas Khemani. So I run a public market fund. We invest both in public and private, but my exposure to dry fruits is we are large investors in Provi Foods. When it went public, we acquired substantial stake in the company. Again, the reason for doing that so is that, again, any time any family or society gets prosperous, first thing which happens is they improve the quality of the nutrition in the food. So, product consumption of dry fruits is going to go up, and as that goes up, more and more opportunity for, branding, premiumization, all those things takes place, and it's categories at a very early stage. Over the next 10, 15, 20 years, this category can become very big, and if you back a founder, like DP who runs a very tight business, then it is bound to create wealth. So that's the reason we kind of invested into it.
Thank you. I want to start with my favorite question, and I think maybe DP, you could start answering with that. Obviously, dry fruits is a commodity. So getting into how do you brand commodities, because since you're building a brand, right? But somewhere I think the dry fruit space has been lagging, right? So we've branded water. So Bisleri, for example, right? Such a huge brand. We branded milk, right? Like Amul, for example. We branded meat. Tata's branded pulses, right? Why is maybe the largest brand in the dry fruit is 300-400 crores, roughly in that space? 400-500 crores, right? So why, why is that? Why are we lagging in my mind in that space? And what will it take for us to further brand this space?
So, dry fruit per se is the, you can say, very last or very late entrant into the branded space. Okay, voice is okay? Yeah. So, it is very late entrant. And region was largely the taxes on that VAT. So, before 2015, the VAT was there and different state was having different taxes. And there was a lot of tax arbitrage between state to state. And post GST, there is a uniform taxes. So, then branding start. And we all, as we all have seen, like pulses, water, milk, everything, all these markets were unorganized before. And now today we can see like milk, we don't see the unorganized or loose milk. Everything is branded. Like large is the edible oil. Large sector is, which is also completely branded now. So there is a lot of space on the dry fruits. And in Indian market, हम लोग को किसी को जाके ड्राई फ्रूट खाना नहीं सिखाना है. People already know about dry fruits. Now we have to give it in right manner. So packaged industry is giving right product, and now there is a lot more opportunity on the premium products. So you can do lot more value additions. It can be on the flavored, it can be on the mixed trails, it can be on the bars. So various products or on the go snacking part, lot more opportunities there, and which is where the whole play is.
Tamrish, since you're an off business, I think you want to have a point of view on that one.
Yeah, so I think more than I'll say कि brand नहीं बना, I think this is the opportunity that lies, right? Today, if you want to create a spices brand, very difficult to do so, right? Me and Ashish were discussing some day back कि India में एक time पे 7 आटे के brand होते थे, आज एक ही है. Everybody is knocked out, right? So rather than thinking that there is no big brand being created, I think the opportunity that lies is the following, that a big brands can be created now, right? It's a big vertical, right? From a trading perspective, pulses, spices, dry fruit, these are big verticals, right? So big verticals, large ticket size items, these are not cheap ticket size items, right? Every house consumes it. You don't have to do the marketing ki logon ko consume karna hai. There's large value addition possible in this business. There are a lot of micro nuts, micro categories that can be introduced. So there's a lot to be done, which has not been done, and hence lies the opportunity and excitement here. Had you been chatting about कि milk में brand बनाना है, it would be a give up right now. Like नहीं कर सकते, it's already done or dusted or too expensive to make one. So I think the reason that we're discussing today is that we haven't done it till now, but there lies opportunity to make it happen.
So I think moving on to the other question, which I kept hearing the entire day today, is the margin in this space. And maybe one of the biggest challenges to branding in this space is the potential gross margin stroke, EBITDA margins in this space, right? So maybe what, Rachit, you want to take this one and tell us what's your take on this? What sort of margins would make sense to you, for example, and how do you drive that?
Yeah, I mean, that's the holy grail, right? But in general, the way, and probably Vijay can also add to that because he wears the investor hat, Vijay and Vikas both. But in our point of view, from our point of view, one of the main things that we would like businesses to have is, as Tamrish was also talking about, build, categories, work on categories, use their presence in spaces such as almonds and cashews to drive cash flows and build out categories which are more value added, right? To drive gross margins in that category, which is, but also not just that, use the right channels, right? Build your modern trade presence. Don't just rely on, e-commerce, right? Or probably use the general trade model judiciously. Use quick commerce judiciously, right? To drive margins and presence on the right shelf space, right? So once you have sorted the gross margin, it's not that you can't sort that out. There's a right sort of proportion of value-added, products that we need to have. Once you reach that, probably, in the next 3-4 years, you will see businesses having that gross margins of around 25%, 30%, right? Which can, then if you run a tight ship, like Vikas said, you can have that EBITDA margin that, companies are seeking.
Vijay, you want to tell us, and what sort of, if there are dry fruit businesses here, what sort of numbers should they be targeting from a gross margin and a EBITDA margin perspective?
Sure. See, having seen this business closely now for 2-3 years, I personally feel that the product differentiation is very low on the end product side because when it comes to almonds, cashews, pistachios and all, by and large, all the products look same. So customer is not willing to be paying more than, say, at best a premium of 10-15% than the unorganized rate. So that means what you are eventually going to be able to charge is 10-15% extra to the customer. Maybe you, being a large organization, you will be able to pull in another 10% through the sourcing and the scale advantages that you bring. Which means by and large, the best case that these businesses can run is with a 24-25% gross margin. Anything over and above that is going to be super aspirational at this stage. And even if one can achieve that, that will largely be through moving into the value-added segment as Rachit was talking about. But that's, very small, because that's a very small portion of the overall industry today. The industry size is 50-60,000 crore, but the value-added segment is less than 5%. So that does not move the needle because everyone talks about players like Tong Garden and all who have been able to do. But for Tong Garden, the nut mixes is the largest share, where they probably make 40-45% gross margin. So as far as the Indian market is concerned, I feel that at least for the next few years, till the market moves to a larger share of value added, this will remain a best case 25% gross margin business. Then the only way is to run a very tight shop, a very frugal business. Know that you are a 25% gross margin means you have to cap all your overheads, branding expenses, corporate expenses, everything combined in the 14-15% zip code so that you can achieve a 10% EBITDA margin. If you cannot run shop that tight where you have to, in fact, an aspirational number should be 10-12% to maintain to run the entire organization. So if you can run the entire organization within a 10-15% cost band, that's when you will be able to sustain and survive in this business for today. And if you see some of the players who are just about hitting that 4-5% EBITDA margin, and if you read their P&L and balance sheet, that's exactly what they are doing. They are managing their entire business in the 10-15% cost bracket, because I don't know any player today in the space who is hitting 25% plus gross margin. So it'll be interesting for us also to see in the next 3 years if anyone is able to hit that number.
Thanks. So I think 30-15 and 30-20 and 10 probably. So I think 10% EBITDA is what I think we could aspire for, right?
Yeah, but today in fact, there's no one who's at 10% also. I think the best player in the industry is at 5-6% EBITDA margin. So 10% is also yet to be seen. And I'm hoping that in the next 3-4 years, probably, some of the companies will hit that number.
Vikas bhai, bringing you into the conversation, so you have a substantial stake in Provi, right? What are your expectations from let's say Provi or specifically from dry fruit, specifically from this portfolio company in terms of margins, in terms of EBITDA? How do you see those numbers, and how do you see those numbers moving up? How do you look at that?
So I think, again, taking the point, commodity business getting branded. If you take the journey of, started with salt, water, everything, like how do you differentiate? The biggest challenge of investing into is low gross margin, because what you give package versus the standard commodity available, there's no differentiation. Milk, if you see, Amul, of course, because of the cooperative structure, created branding because they didn't have to show any ROE or profit. There was no external shareholder for them to report for ROE. So it was a cooperative movement. Hence, they could commoditize, they could create a brand in a commodity far better than anybody else. But if you see, everybody else has struggled. So the real game is that you will have to sell some part of it at a low margin, but how much value added you can do. So if you take the milk industry itself, companies who've been able to migrate towards cheese and the curd and the flavored curd to different other products, they have taken the margin profile which is far more sustainable and allows you to invest back into the brand and, innovation and so on and so forth. So the creation of the margin is actually a journey which will happen over 5, 7, 10 years. Now, many companies will struggle, some companies will succeed in that. The key differentiating factor is that, what is your advantage? Because in the commodity, one of the biggest important factor is your procurement, your supply chain, how efficiently you are able to procure goods. And if you are efficient on that, that allows you to give some edge over your competition to invest back into the so-called commodity, basic badam, basic kaju, basic thing, and then build on that top of that layer, you build value-added product. Like, I think within that you can have even as small as thing like assorting, bade kaju versus chote kaju. The bigger kaju piece will give you in the same batch, you can sort out and sell something at a premium versus, and as DP was telling me the other day, kaju tukdi ka you can make, which otherwise will sell at a cheap price, but if you make a mix and do some value addition, make some, nutritious product, because nutritious value is same. How do you use that same nutritious value product and convert into a value added item which appeals to the customer and seen as a value added product will determine your margin, right? So, and today as the per capita income is going, working capital, people are moving, I think need for nutritious product, on the move product, well packaged product, tasty product has, there is a good demand. Now, if you are able to create that and create a distribution network, and in this, I think one of the most important items to run operations very tightly. You can't splurge. You can't create a big overhead and say, hope that I will make money. So business has to run tightly, and which is the reason at least any company for that matter, but any company which wants to build business, how do you take away money, some part of the margin, invest back into building brand, building value-added product, and over the years, let us say if you are selling today 90% commodity product, 10% value-added product, this ratio needs to constantly keep on changing from 10% to 40, 50, 60%. And that is, we have seen in case of whether it is pulses to, even if you look at as commodity countries like salt, which used to be sold at 1 rupee a kilo, but Tata sold at 5 rupees a kilo, and because they created that iodized thing and stuff like that, right? So there's always scope for creating some perception, some value addition, and faster the companies are able to migrate on that curve, they will be successful.
I think just, and taking it from there, we keep talking, so maybe dry fruits, maybe if it is largely targeting, let's say, slightly premium consumers in the health conscious space, maybe healthier snacking, how do you see this product segment itself expanding? So we keep discussing value added products. So give us some value added ideas, right? So obviously there is flavoring, and I think flavoring of nuts is obviously the basic thing. But how does one expand their product portfolio from the basic to maybe more and more value added? And I was discussing with DP before this, is there like an opportunity to maybe even start touching the nutraceutical space itself? I don't know, but anyone want to take that?
I can again talk about our limited experience in from Happilo, but so the natural extension of products are products like trail mixes, all kind of flavored dry fruits, as you said. But companies have also ventured into where they say that, okay, we are building a portfolio of products around dry fruits. So you can then get into, those health bars, which are built only using dry fruits and without any usage of sugar. You can get into products like peanut butter. You can get into peanut spread. You can get into, what is that called? Basically using any dry fruits, if you can build any healthy products or products which even gym goers can use. Nutraceutical, I think, will be a slightly farther extension and a slightly different line, because then as a company, you also want to be clear about what is the messaging you are sending to the market. What are you known as? What do you stand for? Right? So dry fruit itself, we feel that given that India as a country and as our cultural heritage, we are used to eating dry fruits, there are a lot of products which can be evolved around dry fruit as the base itself. Only, for example, dates. Using dates as the base, there are so many healthy products that can be built. The only problem that happens is that the cost of educating the customer is very high for this new category of products. And that is why the segment does not pick up very fast. So let's say if overall dry fruit is a 70-80,000 crore industry, 90% continues to be the basic dry fruits even today. And it is only 10% which is the value-added products, because you have to educate the customer about it, number one. And second is then the price point of these products don't justify again a mass market appeal. For example, we have built, let's say, health bars, okay, using only dry fruits. So the problem is when you build health bars using only dry fruits, you don't get the sweet taste. So first the taste goes for a toss, and then you have to price the product at 70 rupees, 80 rupees. At 70, 80 rupees, you are only catering to, say, top 5% of India's audience. So that's a puzzle to solve, that when you get into value-added products, how do you make it a mass market product, priced at the right point, and then only it will become scalable. So that again is something which I think is a success is yet to be seen on that front, but it will take time before we see success.
Do you want to tell us how do you look at this as from your point of view in terms of how are you expanding your portfolio into more value added?
So there are a lot more opportunity. I will give you just one small example, and we all have seen one product, Cerelac, okay, for the small kids, okay, or now it's every mother want to give the nutrition to kids. There is no more product, okay. So now you create some powder which all dry fruits has all the nutritions, and you create the powder and put into that. So these kind of product you keep on innovating and put into the market. And I agree with Vijay, there is a lot of cost around the marketing, because the education cost is much higher, and that is why you have to have sustainable business which can keep on throwing some money, which you keep on investing into the business. So maybe your EBITDA margin can be lower in the few years, but till the time you are reinvesting from gross margin to EBITDA margin, some part of that in the education and customer, and that way you keep on increasing your portfolio. And over the period, automatically you will get your product profile percentage will change, and automatically margin will start coming into the business.
I think this is one action area for the council, right? To get into education of dry fruit value added stuff, right? So, sir, aapke liye take away, right?
But that's an important point, Vivek, you are making. That, some bit of, and every association has done, if you take in our industry, the financial market, mutual fund industry association did mutual fund sahi hai, and that changed the game of the industry. Same thing had happened earlier for the eggs. So I think it is, while you have said it jokingly, but I think it's a very important thing you mentioned that, industry bodies should take a lead in creating that awareness and some sort of innovative campaign which can expand this category.
I think that just adds value to everybody in this room, right? Where I think everybody benefits from that one effort from the council, right? So, Tamrish, I know, given your, I think, understanding of distribution, given the type of business you build, right? I think dry fruit, given, I think, shelf space issues, maybe even storage issues. I was sitting in a stall and I was seeing some packaging which is not looking as bright given the transportation and all that. How do you see distribution in this space, right? Also, we haven't seen too many standalone stores of dry fruit brands, right? So though we've had a Provi or a Happilo or those kind, but very few stores have either ventured out, or even they've ventured out, have not really done that successfully, right?
Yeah.
How do you see that?
So I did the second question first, right? I think majority of businesses in this space are family-owned, family-run, right? All Marwadi mindset businesses, right? And that's how it should be, right? So business doesn't throw as much as cash for you to experiment too much in this business, right? If you want to run a store, open a store, give it enough amount of time to prosper, it requires you 2, 3, 4 years of ability to sustain that cash burn, right? In a business which is 4-5% EBITDA best run currently, right? It doesn't give you that much amount of cash from the business to do this experimentation, right? Also, it's a commodity business to a certain extent, right? There are volatility shocks in this business every now and then, which you need to be prepared for. So unless institutional capital flows into this business, which allows you the buffer to experiment and do this, is very difficult to do. Now, answering the first question, I think distribution is not a difficulty. These are high-value products. In our entire agri-food product space, we think this is that particular pocket where the cost per unit where the value per unit is the highest. So distribution per se is not an issue. Distribution, quality, amount of life in the shelf is not an issue per se. The issue specifically comes that in the current structure of the market, almost every company is family run, family operated, right? And it's a tight margin business, right? As everybody in the panel is saying, 25% GM also looks like a dream run to be there, right? So until and unless you run a tight ship where the business throws in cash or institutional capital flows in and gives the business a buffer to experiment on that manner, we will not see things happening in that direction. Because people have to run their entire year-to-year financials, right? So it doesn't leave that kind of opening.
Rajat, you want to add something to that, given your expertise beyond maybe just dry fruits, or maybe even channel-wise, right? So most of us started primarily with online. It's been tough to get into GT now, modern trade, then GT, and difficult to get into EBO. So what do you see from there?
I think I think the main thing, and we spoke about the importance of institutional capital coming in. I think the main thing here is that when businesses are being built, we are not in the times anymore where you can put valuation ahead of capital discipline, right? I think that is very important to recognize, right? So we are not in the time anymore where you can just accelerate top line but not worry about margins. Therefore, as we just spoke about, and therefore what you're talking about, channel strategy becomes very important. You need to be efficient. You need to think about working capital. You need to think about, your cohorts, your repeat purchases. Are you really building an organic demand, or are you thriving on performance marketing, right? Is there really a brand being built, right? Because, conventional wisdom is that brands in India are not built online. They are built offline. Right. So, and DP can of course add to that, but there are enough and more founders who are actually doing the right things, right? So, and I believe institutional capital will back, institutions will back founders who are trying to move the needle, in doing the right things, building the business with a extreme focus on capital discipline, given the structure of the business. This is not a D2C business that you have like a 50% gross margin, right? And therefore you have the luxury of building a brand by, changing narratives and, day to day, right? This is a 25 to 30% gross margin at best, right? So therefore you need to play it accordingly. And if you do the right things, capital will come to you, essentially.
So, Vikas bhai, how does, we are discussing 4 or 5 points, right? So, obviously given your specific maybe investment in Provi and otherwise as well. So, how does one build advantages or difference? We're talking about these issues, right? So how does one build strength or advantages in this space, right? I mean, should you, for example, is supply chain focus a better strategy? Do you need to focus on your margins more? Do you want to focus on more value-added product? I know you have to do a lot of everything, but as a company, obviously still have to figure that out, right? So in your view, or given your interaction with Provi, what are the specific areas you believe you're trying to drive advantage building, let's say in a Provi or any other?
No, like I said, the biggest advantage, especially in a commodity player, because you are competing with the next best commodity player, is your procurement, your supply chain, how best you can procure. If you procure better price than your competition, or if you procure better quality than your competition, either vector, it gives you an advantage to place and have that good head start. That gives you, because ultimately, this is a business where you can have quick turn. So in quick turn, you can make some ROIs and use that money to invest into value addition, which allows you to innovate, which allows you to build brand, which allows you to build distribution, and all of this cost money. So one approach is to, you take big bang money and burn a lot of money and build that. Other approach is to, earn based on your strength and then keep reinvesting. So initially the business looks like it's not profitable, it's not burning, but it's less profitable. But suddenly, the moment your value-added share goes up, your big J curve comes in your margin. So I am a big believer that invest with, advantages, of course, supply chain is a very, very big advantage. And and that is what I think, if you ask me, Provi has executed very well. On the outside, it looks like that it's not very profitable. It's not, of course, not losing money, which is great, but it's not profitable. But if you look at internals are changing every year. And, they will be here. I don't know whether it will be third year, fourth year, fifth year. I would expect it to be earlier, but I'm saying it doesn't matter. If you're investing in a business for 10 years, I don't care whether it is 10th year also, but there will be year when you will suddenly see a EBITDA margin going into 20s. And we have seen this study this company called LT Foods, which is basmati rice. Now, rice is as commodity company and business as it can get. But there they make, 18% margins kind of thing, right? But they have invested into this over 10 years, 15 years, 20 years, right? So I love businesses, entrepreneurs, which, are looking for delayed gratification, building businesses, not burning money, using profits, building some moat. Moat, it could be, of course, supply chain, moat could be brand, moat could be your sheer goodwill with the customer, because if you're supplying product year after year, great quality, new innovation, and I think they have done some great job. Lot more can be done. I can tell you, there's so much scope. Lot more can be done, but so that's how at least we see.
Vijay, you've been working with Happilo, right? What are you guys focusing on driving, right, in all these various marketing mix?
So I think a lot has been said already. By and large, you have to drive excellence in every element of cost. Sourcing being the largest cost element, first of all, you have to drive efficiency there. As Vikas said, that if you can source even 3%, 4% cheaper than your competition, you have won half the battle. You have to process at the cheapest cost possible. Your cost of transportation per kg has to be lowest. For example, let's say if you are operating in a business like this, you can't have a factory in the middle of an urban center, because your rentals and all will not justify that. Your cost of processing per kg, say, has to be sub to 3%. Your cost of transportation has to be sub to 3%. So you will look at every element of cost and see that every single element of cost, you have to be better and better with every passing year. You have to believe that there is no end to achieving efficiency, right? Your wastage, for example, if you are operating at 1%, I'll say, I'm already best in the industry. That doesn't mean next year you can't target 0.8 and the year after you can't target 0.6. So you will have to keep getting better with every passing year in every element of cost. And that's what, as investors, that's what we have seen. That's what good founders and good entrepreneurs are. They don't stop. They will keep finding elements of efficiency, even if they are the best in the industry. DMart is a classic case, what DMart has done over the years, and no wonder why market gives it the valuation that it gives. So across items of cost, you will have to keep finding efficiency, and you will have to keep working on till the last rupee that is left on the table. You are sure that you are not leaving anything on the table.
So I think it is all about building, I think, for want of a better word, baniya businesses, right? We need a Lala at the top who's saving every single rupee, right? So I think last question, and everybody maybe, closing thoughts. So 2021, 22, we saw a lot of companies in this space cross our desk. But in the last couple of years, we haven't seen too many cross our desks, and in fact, very few funding has happened in this space in the last couple of years, right? Compared to maybe almost $150 million in that period of 14, 15 to about 21, 22 in that period, right? So, one is, how do we revitalize this, last parting thoughts on, what is the key feedback people, especially from the trade, should take home? So, Vikas bhai, you want to start?
So I think, like you said, there were 200 startups. I did not know, but I'm sure there are who are looking to raise capital. So in any industry which is evolving, one of the key important thing to have success stories, right? If early stage of your journey, if you have many failure stories, it creates a negativity in the minds of investors. I'll give you an example of jewelry industry, right? Last 20, 30 years, so many companies, in jewelry industry came to the markets to raise capital from investors, and we all know that that's again unorganized to organized, and most of the companies came to market to raise capital, failed. Some of them were on accounts of governance, some of them bad management, some on money counts, but investors lost money until Titan came and created a great trust, and that, I will give you great product at a reasonable price, but, and won the trust of the customers as well as the investors and created a great story, right? Same thing happens in every industry, right? It happened in rice industry also. Many companies came, lost money. And to till date, I can tell you, investors don't have faith in investing into agri-based products. I mean, and now Tatas are trying, but because it is Tata, still there's a lot more trust and all those things. So I think this industry is also, in my opinion, going through the same phase. If you have few accidents early on, I think investors will again, once bitten, twice shy, right? So same thing will happen. I hope that, industry, there are a few success stories comes out. I hope you guys make a big company, because I think, over next category is big. There's no doubt. Like jewelry was always big, will be big. But how do you create an organized play which addresses, balances all stakeholders is important. I have no doubt that, and again, globally also there are many examples, right? How do you, and we have seen, by the way, in case of namkeens and all those things now, which is again as commoditized industry, but now it has got a little bit more organized, and today we see how, a company is getting valued at 70,000-80,000 crores in namkeens, and, which was considered basic, अपना बाजू वाला local stuff, right? कोई भी बना के भुजिया बेच सकता है. But the fact is the same industry has gone through, and भुजिया में भी ऐसा, if you go back, there was not much margin. So there are many examples in front of you to learn from them, that how those companies and sectors and kind of migrated from a commoditized industry to an organized industry and created significant value for the stakeholders, for yourself and for the industry. And I see dry fruit industry no different. Again, there are many examples globally where if you go, using dry fruits, 10x, 20x value addition, 70, 80%. Chocolates, just not exactly dry fruit example, but chocolates. Now, 70, 80% gross margin business. I see no reason why there cannot be many dry fruit items with 70, 80% gross margins. You can create that, right? I was in I was in Israel somewhere where they were selling caramelized dry coconut with caramelized cover, right? So very tasty, yum, right? But they were selling like in Indian equivalent rupee 2,000 rupees a kilo. If I did my mind more than taste, I was saying कितने भाव बिक रहा देखता हूँ. So I calculated back saying ये इतने रुपए में बिक 2,000 रुपए किलो. Now नारियल और caramel उसका cost 100 रुपए किलो नहीं होएगा. Right? But so I think like this, if you create product which appeals to the customer, you find the gap, and that's how there will be huge, I have no doubt in my mind. But it is just that one needs to look upon to that, and there's a huge value creation potential. Now, between potential and reality lies the execution. That's where people like him comes. Hope they don't disappoint.
No, I think this is the most important point that Vikas is saying, that success stories will have to be created. Capital will automatically come. It's a chicken and egg situation, that first capital comes or first investors make money. But if investors do make money in sectors, there have been enough examples that after that capital flow has never been a challenge. Now this is a sector where the early investors have burned their fingers, right? And they have not seen success stories yet. But once we have 3-4 success stories getting created where investors make money, there will be windfall of capital coming in. Flow of capital will not be a challenge. We have seen that in the renewable space of late. Everyone wants to back that space once success stories have been created. We were early backers of companies in manufacturing space when no one in India wanted to invest in manufacturing. We invested in Dixon Technologies 20 years back when no one was talking about manufacturing, and now it's a 1 lakh crore company. So once success stories will get created, availability of capital will not be a challenge at all, and money will automatically keep coming in. But that is on the founders to deliver few success stories where the investors' confidence in the whole sector will go up.
So I think one more takeaway, celebrating small success stories. Deepak, I think if you are also there in the audience, right? So you guys have a lot of takeout, right? I think so. The other thing is figure out smaller success stories maybe, and at least start celebrating those a lot more, right? Your closing thoughts.
So I will add into this. I think two important point is like first foremost is the we as an industry a whole and who want to, and capital is always important part to grow any business or any industry, and which is where like we need the capital market and all these guys are addressing that. And what I am trying to say here that as an industry we have to respect the capital. And when we respect the capital, then automatically utilization of capital will be always at the efficient level. And the second point, I would say that the governance part or the compliance part, and which is where if the whole industry will try to build that, automatically industry will grow on that. Because earlier this business was largely run on the cash part, and gradually it was now coming into the mainstream. And over the period, if we can address that as an industry, this will help to grow. If anybody want to reach the capital market, that is the important point on that. Yeah.
I think, most of the things have already been covered, but in my view, one last thing that it takes two to tango, right? So while founders have to obviously have discipline and execute better at scale, build narratives, build a brand, value-added stuff and all of that. But from an investor point of view, the only thing perhaps, to the community that, that will pump in capital is that, look, you can't have your cake and eat it too, right? So there needs to be patient capital that needs to come into these businesses, right? You can't expect, if we are saying that the businesses right now need to move from, let's say, 18, 19 gross margin to, let's say, 25, then we can't expect, EBITDA, right now to jump the same way. EBITDA will come later, right? So, because value-added stuff will need investment into branding, right? So there needs to be, they need to back the right founders, and the founders obviously need to do the right things, but it goes both ways.
So I'll take this example away from what Vijayji was telling about LT Foods, right? I know the owners very well, saw the company very close and up. I think we have a tougher battle than most sectors because agri in general requires much more effort to generate margin. But think of a company like LT, right? To deliver 8 to 10% EBITDA margin, they are one of the biggest basmati brands in India. They're the biggest basmati brand in USA. 20% of the revenue, so they're almost roughly $1 billion in revenue. उनमें से 1400-1500 करोड़ revenue comes from the organic nature bio company, which is the largest organic basmati brand, 30% margin business, right? So for a company to reach in an agri space 8-10% EBITDA, including having brands, they do everything: paddy sourcing, having their own manufacturing, owning brands across countries, being a B2B brand, being a B2C brand, doing an organic brand. After the ability to execute this over a period of 25 years, they are where they are. So is a large outcome possible? 100% yes. But 2, 3, 4, 5 players have to lead the industry to a large outcome. It doesn't need to be that happens over the next 4, 5 years. But over the next 5, 10 years, 2, 3, 4 large outcomes need to be there. And until those outcomes actually come, I don't think, because agri space in general, unfortunately, attracts lesser amount of capital, right? So for people to feel very comfortable in this sub-segment of that space, and they treat it more like an FMCG company or FMCG sector rather than being an agri vertical, 2, 3, 4 large outcomes have to come. How do they come? How will they come? It's left to the room to decide how that happens. But once it happens, capital looks for numbers, right? Capital looks for the right amount of return metrics. If they are there to be seen, people will come.
Thank you everybody. And sir, since you are the only listed entity, the mantle is on you to get a large outcome, and I think a lot of weight on your shoulders now to deliver a large outcome. But thank you, but thank you everybody. I don't know if you have time for questions.
So if that's okay, Vivek, if we can allow an opportunity in terms of networking post the session, would that be fine? Because it's a final session.
Yes. Yeah, we're good. Thank you.
Perfect. On that note, ladies and gentlemen, let's give them a warmer round of applause. What a fantastic discussion it's been. Please allow me an opportunity to now call all of you towards the center of the stage. Allow us to put further spotlight on you. And thank you so much for your contribution. Ladies and gentlemen, it's truly a momentous occasion wherein we have with us our guest of honor who's joined us. He's the Consulate General of Iran in Mumbai. Let's call upon none other than His Excellency Hassan Mohseni Fard. Thank you so much, His Excellency Hassan, for joining us. We'd also like to request Yash Gauri, the Treasurer and founding member of NDFCI. Let's give him a warm round of applause as we welcome him joining us. And ladies and gentlemen, on that note, let's get them all in one frame for a photograph. Let's give them a warmer round of applause. And thank you so much to each and every one of them for joining us. Of course, we'd also like to make this moment a little more special, wherein we request Yash Gauri to please step forward and help us in the personal felicitation of His Excellency Hassan. His Excellency Hassan, please step forward. Allow us to give you a little bit of Indian tradition, wherein we put a lovely shawl to welcome you, and your presence is truly invaluable to us. So we always like to create these highlight moments in Mewa, India, and thank you so much. And with that, if I may request His Excellency Hassan to please stay back and further help us to felicitate our panelists. So His Excellency Hassan along with Mr. Yash to felicitate. So starting with Vivek. Vivek, if you can please step forward. His Excellency Hassan and Yash in one frame along with Mr. Vivek Kumar. A warmer round of applause, ladies and gentlemen. I know it can be a little troubling for His Excellency Hassan, but I'm sure he's very cooperative on the same. On that note, if I could request Mr. Vijay to please step forward. Vijay, let's get you in one frame with His Excellency Hassan and Mr. Yash Gauri. Come on, Mumbai, a final big round of applause. Fantastic efforts from the team, and of course, thank you so much to each and every one for joining us. We'd also now request Tamrish Sinha to please step forward. Allow us an opportunity to put a spotlight on you with His Excellency Hassan and Yash. A warmer round of applause for Tamrish Sinha. Their smile says it all, and I think that's fantastic to see. May we also further request Rachit Sabharwal to please step forward. Rachit, allow us an opportunity to further put spotlight on you. It's great to create these moments for the team and of course all the individual speakers joining us. We'd also now like to request TP Jawar to now step forward. Mr. Jawar, please, a big round of applause for you, for all your wisdom you've endowed on the panel today. And thank you so much for your valuable time. And lastly, but not the least, let's call upon Vikas Khemani, please, to join us in the center. Vikas, we'd now like to further put the spotlight on you. And I think your smile is fantastic. Let's continue with that applause for Vikas. Ladies and gentlemen, this is all happening on the day 3 of the second edition of Mewa India 2025. Fantastic to see such great smiles, great energy towards the end, and what turned out to be a very successful panel. Thank you once again, gentlemen, for joining us. Please feel free to join the audience. And once again, a big round of applause for our guest of honor, His Excellency Hassan, for joining us. And with that, ladies and gentlemen, what a fantastic 3 days it's been. Yash, would you like to say a few words?
I think this panel was sort of a dream come true. We've been putting together this event for so many months, and also the major concept or the vision that we had for the organization was to move and capture the organized space and make it more visible in the spectrum of all investors. So as we move ahead and we draw your attention, let great businesses be built, and I hope NDFC can facilitate the whole value addition journey for the dry fruit and nuts industry. Thank you all for coming in. We conclude the panel sessions for Mewa 2025. Thank you.
Well, thank you so much. That was the treasurer and founding member of NDFCI, Yash Gauri. With that, ladies and gentlemen, as you rightly said, we conclude with the 3 fantastic days of the conference of Mewa 2025. We'd like to humbly thank all our partners, all our valued attendees for their invaluable support over the past 3 days. Feel free to network, and we're now going to be inviting you at 7 o'clock to join us for a gala night courtesy True Nut Food Manufacturing as our sponsor. Stay tuned, and thank you so much for your valuable time. This is me, Bhavna Bhatia, signing up for the day Mewa India 2025. You've been fantastic, and thank you all for joining us. Thank you.